So this is a video to help you complete Chapter 5 homework assignment for Business 7 Accounting for Small Business. So always complete your learning assignment Smart Book first and then go into your homework. So in your homework you can see there is 42 points, meaning there's 2 extra points built in, and there are 6 questions. So I will do, I think, the top 3 and give you hints for the rest of it. So this question number 1 is asking that if the net income is 135 before making adjustments, what would be, assume that the required adjusting entries have not been made, what effect do these errors have on the reported net income? So every adjustment is a debit increase to expense and decrease to asset. So net income is not impacted by assets, it's impacted by the expenses. So if I do not make adjustments, I do not record expenses. So my net income would be too high, overstated, and the amount you just add these 3 expenses, which is equal to $28,200. That's it. So again, every adjusting entry is a debit to expense, to an expense, and a credit to an asset. So if I get to record an adjusting entry, your expenses are too low, which means net income is too high, overstated. Okay, the next assignment number 2, so we're given this information and we have to journalize adjustments and then post them in the ledger. So to journalize adjustments for supplies, always every single adjustment, figure out the math part. How much is the adjustment? So first step, figure out the math. Supplies used, 11,000. That's it. That's how much we used up. So we're going to debit supplies, 11,000. Supplies expense, sorry. So I put the amount first. And then what are the accounts? So for every adjusting entry, we always debit an expense. So here it would be an example of supplies expense. And we credit an asset called supplies. So what happens, expenses go up and supplies go down. We've used up supplies. And then you go to, so let me record this entry. And then we can go to the ledger and we're going to post. So supplies on December 1st were purchased $18,000. But now we've used up 11,000. So 7,000 balance goes on the balance sheet. Again, you had 18,000, you've used up 11. So your final balance of supplies that is reported on the balance sheet is $7,000. And so we credited supplies, and we debit supplies expense. So right here we debited. So that's the first entry. The second entry is your journal entry worksheet. Okay. The second entry is for insurance. Very similarly, expired insurance given. So the company paid $49,200 in December 1st. But now we've used up $8,200. So the math is given. $8,200 debit, $8,200 credit, debit and expense, in this example insurance expense, credit and asset, in this example prepaid insurance. Go to the record entry, go to the ledger. Again, prepaid insurance was $49,200, increased, and now we are decreasing it by $8,200. And we are moving it as a debit to insurance expense. And then the last transaction here is going to be for depreciation. Depreciation expense, $5,800. So again, math is given, $5,800, debit depreciation expense. These are new accounts, credit accumulated depreciation. So this account, accumulated depreciation, is an asset. It's an asset account, but it's a contra asset. It's a permanent account. It is on the balance sheet, but we have for this account the signs opposite to assets. So it's contra asset minus plus. And then we go to the ledger, record entry, go to the ledger, and we're gonna debit accumulated depreciation. I'm sorry, debit depreciation expense and credit accumulated depreciation. All right, so this pretty much completes the first two problems. You have the journal and you have the ledger. Okay, I'm going to stop here and record number 3 separately. Thank you so much.